Welcome to the Transparent FX Academy. In this video, I'll speak about USDJPY. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite important level of historical monthly demand and support. In fact, from here already in multiple occasions, the market has created massive rejections to the upside, fueled by very strong institutional buying. And we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market is testing and rejecting to the upside once more this exact same level of historical demand and support, and there is good probability of seeing more bullish price action created away from this level, as already happened in the past when the market was testing that exact same level of historical monthly demand and support. Let's drop down on the weekly time frame and see what we have. Now here in the weekly, what we have is a perfect example of a shift of trend happening here on the weekly time frame. We can see how the market went from creating weekly lower lows and lower highs to then having this triple bottom created exactly at this level. And now the market has inverted to the creation of weekly higher highs and higher lows, potentially with the first higher low being created as we're currently speaking at this level. Now, why is this level quite important? Well, let's first of all speak about it in the case of an ideal uptrend. Now, when you have an ideal uptrend, what you expect is the market to create higher highs and higher lows, but you expect the market to also go and retest exactly the previous resistance turn support. So you expect the market to create a high, then break above the high, go for the retest of that previous high, which is previous resistance, turn support, and then create the continuation to the upside. Now, in this specific case, this level here is the retest of the previous high, because in this case, the previous high is this level. So the previous weekly resistance now turns support, from which you expect the market to continue higher. So here in the weekly time frame, everything is quite clear. What we expect in this case is from here to see the market create a potential rejection to the upside, because this is exactly the previous level of structure from a weekly standpoint, which was acting as previous support. Then after the market broke it to the downside, became resistance, as it is the resistance level which created these two highs. And now the market broke above the level, so this previous resistance is now once more turned support. And what we can also notice is that this is not only a horizontal level of support. Since we have an impulse and correction, if we want to measure the correction, we have to take a Fibonacci from the low to the high of the impulse leg, and that shows us that that level is not only, as I was saying, a horizontal level of structure, but it's actually a confluence of support and demand zone, because we have the 50% retracement lining up precisely with that level of horizontal structure, creating confluence of demand and support exactly in this level. And when we have confluence of support and demand, there is an increased probability of seeing institutional buying and a rejection to the upside. So let's drop down on the daily time frame, and before we dig deeper in it, let's go and see what is going on when it comes to the commitment of traders, so what the big players in the market are doing on USDJPY. Now, if we're looking at the data for the JPY, we have to keep in mind that we are already looking at JPY USD, because all currencies on the spot are traded against the USD. But if we want information on USDJPY, we simply have to reverse everything, because if institutions are shorting the JPY, they are longing, obviously, USDJPY. And that is exactly what has been going on in the long run. We went from having 179k net positions all the way down to now having only 90k net positions, so basically half of the net positioning. This means that institutions have been increasing their shorts on the JPY, going from 21k all the way up here to 89k. So essentially we have 4 times the amount of shorts from an institutional perspective on the JPY, which means that we have 4 times the longs on USDJPY, because again, if institutions short the JPY, they are longing USDJPY. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. Now here on the daily time frame, the situation is very clear. We have strong support at this level, but at the same time we have resistance at this level, which means that the market is currently in a range from a daily standpoint. So it is trapped in between 2 levels of resistance and support. Now, until the market will remain in between these 2 levels, more horizontal price action could be expected. Things get interesting not if the market breaks the range to the downside, but if and only if the market breaks the range to the upside. That is where things get interesting, because if the range is broken to the upside, this previous resistance becomes support. And since we already know that institutions have been longing USDJPY in the long term, a break of this range to the upside increases the probabilities that on the retest, institutions could add even more longs, further increasing the probabilities of a potential rejection to the upside away from this level. So if the market will break and retest this range, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect if the market would shift from an intraday bearish to a bullish market is to see a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.